You're watching Wall Street Confidential on TheStreet.com TV. I'm Farnoosh Torabi. Time to get real about the market in 2008. If any of you were awake yesterday, we started off the year on a pretty sad note, down 200 points on the Dow. People wondering if this is going to be how the rest of the year will shape up. Jim Cramer, what do you think?
You know, I always have a predilection to be bullish. I got in when the market was at 1,200. Obviously, it's going to 14,000, now pulled back. But I want to emphasize that I care tremendously about how a year starts because it does set the tone. Yesterday was miserable, and there isn't a lot good happening right now. We're not in buyback era period right now because it's right before a quarter's about to be announced. Obviously, we have valuation going for us versus treasuries. But you know what? If you only have valuation going for you and you don't have increasing earnings, you don't have a lot of visibility, you have the Fed against you cutting too slowly, you have the world economy slowing, you can't just come in and say, hey, listen, it's going to be another good year. We had the NASDAQ up 10% last year. The S&P was up, but less than bonds. But that turned out it was a very poor finish, at one point a very good year. I feel strongly that you have to take these signals and look at them and be realistic that it's just going to be a much harder year. Now, consensus is that it's going to be a much harder year, but consensus can be very right. In Stay Mad for Life, we talk a lot about the notion that don't buck the consensus. Now, that doesn't mean you can't buy. If you find a high-quality company whose stock has gotten hit, so it's reduced, that's an opportunity. But what I'm saying is that's a bat on your shoulder opportunity. You've got to keep the bat on your shoulder this year. There's going to be a lot of opportunities to swing that won't be right. And that's very different from when there's a backdrop that things are going to go well.
This is also an election year, and historically, election years have been well for the market.
Right, there's usually a lot of liquidity pumped in. If a Democrat wins, when there was a Democrat that was in, that's bullish. If a Republican wins, when there was a Republican that's in, that's bullish. But when there's a change, when Republican goes Democrat, that has not produced good results. Right now, I think the perception is that the Republicans have screwed it up and the Democrats win. That has produced a very difficult market where it's either been down or flat. Again, we don't have a lot of good things going for us going into the year. Now, why not just sell everything? Okay, well, there's a couple reasons why you don't want to sell everything. One is that the Republicans have a resurgence, then you're going to want to own. Secondly, the Fed is doing measured cuts. So by this time next year, they will finally get to 3% or 2 3/4. Then you'll have a better yield curve. Now, you don't know when the market will begin to react to the Fed doing it right. We know it isn't here. We know that from looking at Nat City and from Citigroup, and we know that from looking at PMI, which is a very dangerous stock. Downey Savings, very dangerous stock. MGIC, very dangerous stock. These are showing stress. I did a stress index for Mad Money, and it started at 100. It was 6 months ago. It's now at 50. You know, these are just things that we can ignore lots of negatives, but it's done at our own peril. My friend Larry Kudlow is ignoring all the negatives, and it's painful to me. It's very painful to me. I think ignoring the negatives is a political decision or an ideological decision, and politics and ideology are not ways to make money.
Because even though things are negative doesn't mean you can't come out on top.
But no, but if things are negative, they're negative. I mean,
right.
It's a time and place issue.
We have to acknowledge it.
Right now is not a great time. And I know that there are a lot of people who think, well, Cramer's a permabull. Well, I mean, I'm so not. I hated auto. I hated finance. Now we're starting to lose. I hated retail. Anytime I went into a foray in these, I lost money for people. Now we're beginning to lose healthcare. Because of inflation, we're losing tech. Witness EMC, witness Corning, which Hewlett-Packard now below were reported. I cannot be oblivious to this. When you have a shrinking group and it's really just oil ag infrastructure, the idea that you can therefore say the market's fine is pretty ludicrous. We're adding gold. Gold has gotten better. But again, you're talking about a universe of maybe 25 stocks. I mean, that's a small universe.
All right. Thanks a lot, Jim Cramer, for getting real on the markets for me. This is Wall Street Confidential. Stay tuned.